Thanks to the panelists and to the attendees for being here. Our session looks at investment and advisory to the energy transition in our region, in Bulgaria in particular. And we are starting with a question to EBRD and IFC on if they can tell us a little bit more on their mandate in the region, what specific products are you deploying on our market, and where do you sit in the value chain? Where are you most active? Is it grid modernization? Is it storage? EU-funded programs, if you could touch on that subject as well. So I give the floor to Svetlin first.
Thank you, Konstantin. Thank you to the organizers for having me on stage today. It's a great pleasure. To answer the question about EBRD mandate for Southeastern Europe, including Bulgaria, and the priorities, I would start by saying that EBRD, in very general terms, supports, on one hand, decarbonization of the energy systems, and on another, electrification of the economies. And Bulgaria is actually a great example of what we do, and it's a great example for a number of reasons. The recent explosion of battery storage and Bulgaria becoming #1 in that space is seen as a huge success. So EBRD believes that we were part of the whole journey. We are not only looking to finance adding capacity, but we also want to make the systems work as a whole. So in Bulgaria, what we provided was starting from policy advice. So the Bulgarian government very boldly committed significant amounts of money under the Recovery and Resilience Plan to support renewables and battery storage. Then our advisory teams, with the help of external consultants, supported the design of these grant support schemes under RRP, and as a result, supported the deployment of battery storage capacity in a competitive manner. Then, of course, as a result, Bulgaria pulled in front significantly compared to the region, and then, in addition, EBRD provided financing to some of the projects that were supported under Resilience and Recovery Plan. And in general, we did not, of course, want to take away, crowd out commercial banks. But we provided financings for more complex hybrid projects or pipeline financings or financings on a holding level. Such example is the financing for the Renalfa holding, which happened last year. It is a 315 million syndicated financing by a number of banks led by EBRD in support of a massive pipeline of 1.2 billion euros across 4 jurisdictions. So this, I think, is a great example of the priorities and the ways that EBRD can support the whole journey. So not just financings, but supporting the systems work in general.
Thank you. Благодаря за покана, благодаря на публика за внимание и за присъствие. So I represent IFC, another DFI here on the panel, and I work in infrastructure and energy investment department for the European region. I will try to build on what Svetlin said, because IFC as an institution is very similar to that of EBRD in terms of strategic priorities and sectors and industries that we focus on. So I will not belabor on that because that was already mentioned by Svetlin. I would say that the role of DFIs in countries like Bulgaria these days is really to look at frontier opportunities, markets, and industries. An example of that is that I think both EBRD and FC were part of the financing of the first projects which were financed with pure merchant risk exposure in the renewable energy space. And very quickly what we saw after that is that commercial banks took that as a positive signal and were able to afterwards do a lot of the financing on their own without having DFIs in the group. And I think it's thanks to that and also to the general entrepreneurship spirit of Bulgarian investors that we now have a success story with really a lot of capacity, in renewable energy capacity developed, as well as battery storages more recently. So for us, for DFIs, it's about looking what's next, what are the new opportunities. A lot of that is actually thinking about new products. So things such as HoldCo, loan financings, supporting equity investors, taking preferred equity positions, slicing further the capital structuring, seeing where we can be additional with our know-how. My personal sense is that at the commercial banking sector, the liquidity and interest and capacity remain strong. Maybe where in the future support will be needed is actually with equity, capital and equity financing. And this is something that we are focused on to see how we can support both international and also local sponsors who are looking to develop projects. And the last thing I will say, I think really for DFIs, it's also important to think about where we can have additionality in terms of our know-how and expertise. And one of the areas is definitely environmental and social aspects of projects. And this is something which sometimes is seen as an annoyance, but I think there is large, complex projects where it's really, really important to do them in a sustainable fashion with proper and due care for environmental and social aspects. And I think we also are seeing that more and more investors are starting to see it the same way. And this is our role with a really a deep know-how on these aspects to help do these projects in a proper fashion. To give comfort to investors and to commercial banks to follow and finance these large, complex projects. So, stop here.
Thank you. Maybe switching to Julian to ask you to elaborate a bit on the mandate of RBI and tell us what is the current deal landscape that you're seeing from your position.
Thank you. A word on RBI. So we are indeed one of the most active M&A advisors and matchmakers between sellers and buyers of renewable energy over the past 5 to 6 years, or simply when we started these pioneering efforts around riding the new Green Deal wave. And ever since, as of today, we are working on numerous transactions, mostly varying from anything that's like 100 megawatt generation unit and above to multi-gigawatt regional or portfolios or platforms. I would say we very often work on a larger transactions on the buy side, representing multinationals that's trying to make their entry into our region. But perhaps most often we represent sellers of smaller to larger and utility scale projects in the region. Very, very often first-time entrants into the respective country. Examples in particular in the Balkans, and to be even more specific on Bulgaria, we have the first-time entrance entry transaction for companies like Enery, first-time entry for Kago, for MET on their acquisition of an operational wind park. then Resolve and Actis, which was a 230 megawatt project co-financed with our friends from IFC as well. And only last year we had 400 megawatt transaction, again, first time entrant of OMB in the renewable space in Bulgaria, both from Energy and Hellenic, first time entry into the country, Metlen also last year. So quite a few transactions, Astronergy and so on. Similarly, so Romania in terms of transactions number and also the Western Balkans region. But perhaps the transaction just closed and kind of shaping the current trends that I can mention is something we closed a month ago, which was Green Votes sale to ENGIE in Romania, which was a 250 forward COD transaction of a wind power plant. So in essence, yeah, I mean, your question of about the typical transaction, maybe what I can say is over the past couple of years and probably even over the past 1 year, the market's been changing extremely rapidly. So the typical transaction is definitely no longer an in development, pre-ready to build single standalone PV seller or developer that's trying to find opportunistic exit. Simply those investors that were also looking at transactions just 2-3 years ago, they grew from less experienced investors to larger IPPs and platforms with much more sophistication. We had no PPA market per se just a few years ago. This has evolved dramatically. Most of the projects these days are RTB projects or RTB plus as we call them. So it's very different. And I think probably a trend we see that is worth noting is the shift from one asset class to another. Simply most of for very obvious reasons, the investment focus being always on PV and solar so far. And what we see is especially the larger investors groups in our region coming up with disproportionate, disbalanced portfolios, very heavy on solar. And that translated into a rapid search for wind and also hybridized co-located batteries assets and so on. Maybe on the wind, it's worth mentioning, it's not only about diversifying portfolios, it's also simply wind with its load factor and profile is a much more PPA suitable asset. And when you combine it even within a solar portfolio, your chances of going out with a closer to base load profile increase, and thus also the ability to commercialize your entire portfolio. And so from that perspective, we see all these shifts, and perhaps final observation on your question. Certainly, the market is no longer what we used to have as highly opportunistic market where someone that has land secured is going out to develop and sell as RTB. It's really a market where we have much more sophisticated players, and the name of the game is now to have a target or to have a product that is suitable for the commercial strategies of the various investors, IPPs, funds, whatsoever. Meaning, it's no longer sufficient to simply have a an RTB project, and now, you know, in ideal case, it needs to be commercialized, it needs to have a PPA in order to have, to be able to secure financing. And once you have financing, obviously, your ability to go for higher returns is totally different given the increased leverage sizing, and thus the product you're selling, you know, achieves significantly more higher value on the M&A market.
Thank you. I have a follow-up question on that, but let's go to Dimitar first. Dimitar, can you tell us a bit more about your mandate and where are you active in the region, and maybe a little bit more specific, what are the key risks finance parties are looking at in terms of that? What products do you deploy on the market?
Thank you. Thank you once again for the invitation. I would focus a bit more on the topic, basically, but with a few short words. We are insurance brokers specializing in the renewable energy sector. We can guess from our name. We are one of the leaders in insuring renewable projects, mostly leaders in the Southeast Europe, definitely, with over 11 gigawatt hours of BESS projects insured across Europe, over 7 gigawatts of PV and over 3 gigawatts of wind. Pretty much we have a strong background, not only in the insurance field, but also being investors outside of the insurance business. We do invest in PV and BESS, which helps us understand the risks and what clients, investors, CPC, OEM companies, banks need from the other side, because we've been through most of the processes that go behind, like development, construction, operational risks. Coming up to the risks, actually, currently with the BESS projects, most reviewed risk becomes the fire safety. Definitely that's a topic that's brought up in recent years. I mean, in Bulgarian insurance market was not that developed back in 2024 when the first utility projects started to pop out. And at that time, we took the opportunity to basically teach the local market what are the market standard requirements, so to say, in terms of what...
Was this driven by the finance parties or by you as a provider of this service?
So about the requirements, it was driven from both sides. First, it was us that brought some information from outside of the local markets, because we do work with a lot of UK and German companies, and definitely they're more developed on the topic about BESS technology. Requirements were totally different at that time. So we have some case in developing the local market and their requirements about insurance. The other case was that investment funds, banks, especially lenders, insurance advisors that were behind them, they were the ones that wanted to basically plans to comply with much better conditions in terms of deductibles, limits, clauses, thus helping the insurance market basically to review their way of predicting the risks. So definitely some of the topics about fire safety became certification of equipment. Is it certified according to the market standard? For example, one of these things are the UL 9540A certification, NFPA 855. And bear in mind that these are things that actually before 2024, they were pretty much requirements on the Western market. They were just not brought here. Another topic is definitely the distance between containers, which again is brought up because of the fire safety issue. Pretty much that's some of the few things that developed well the market. And bankability is no longer, I mean, banks no longer just want to transfer of risk, they want bankability. Basically, insurance is the key thing to transfer your case to bankability. And that's why it's important to have it in development stage. When you have the bank with their requirements in terms of the insurance, you need to have also the insurance company so that you comply with their terms also.
And do you see any development from developer side on realizing the importance of the insurance? Not that it's only a requirement, but it's practical importance for the project compared to when you started to educate the market, so to say.
Yeah, absolutely. I mean, things have changed a lot since the first wave of PVs. At that time, definitely investors learned a lot about how PVs should be insured and why it's important. And then when we had the first wave of best technology right now, I mean, the market was kind of already educated on this topic, so it helped a lot, definitely, to find that it's not just a simple transfer of risk, it's having your project being bankable. Another thing is that a lot of the financing parties, I mean, we had the Restore 1, Restore 2 programs. They had conditions about insurance, which made it, I mean, obviously these were the biggest plants that were built right now in Bulgaria. So obviously this showcased to many other investors that didn't use financing in any way, that this is the way to go, definitely. And if you want to, even later, if you want to use your project to be sold or anything, doesn't matter what stage is in, definitely if it's not backed up in any way, then it doesn't seem to be so much interesting to the other side, to the investor.
Okay, thanks a lot. So seems that developers are improving on that side as well. And going back to EBRD and IFC, Svetlin and Nikola, maybe you can tell us a bit on the regulatory and market challenges that you face in providing financing to Bulgaria, and also from your knowledge on developers' side, what is the bottleneck to bringing in more capital in Bulgaria, developing more projects?
Thank you. Konstantin, so look, on the regulations, my personal view and opinion is that this is not necessarily a huge obstacle in Bulgaria. I think going into a direction of further loosening the regulations is probably not the right direction of travel. Regulations are there, they're important to ensure that the projects are implemented in the right way. I think maybe where there is probably some room for improvement is consistency in applying regulations, transparency, and then also simply capacity building in various institutions that have to deal with a lot of requests, with a lot of approvals, and with this huge wave of projects in the renewable energy space coming in, it's obviously not an easy task for any administration, including Bulgarian one. Some examples that I think everybody is aware of is that when it comes to wind projects in particular, once certain elements of it enter into the judicial system because of certain court proceedings, I mean, this tends to take a long, long time. But this is part of a broader environment and framework, and it's not an easy one, I think, to tackle. But obviously, we all wish for it to be a bit faster. I think in terms of market constraints, look, I mean, clearly, if you look at the other countries in the region, like Romania, like Western Balkans, like Poland, in those countries, the governments were more, I think, in a way proactive to provide for some different kinds of financial support for the offtake of electricity, including contracts for difference schemes, capacity payments for battery storage, etc. In Bulgaria, this has not been the case. I think the government took a different course to provide more capital capex subsidies. But at the end of the day, I think we see that things are going well, right? And Bulgaria is one of the front runners when it comes to investments in the renewable energy space. So actually, it's difficult to argue that the government should necessarily do more for now. I think things are going well. The market signals at the moment are such that investments are happening. I think what we are seeing is that slowly, when we talk to different investors, I think we are coming a little bit to a point where things will slow down and we will see less new projects coming up. So it's going to be, a point in time in the next half a year or a year or so for some reevaluation and taking stock of how things are in the market, because obviously, even though we have a lot of investments which have happened in the past years, I mean, energy transition will continue. There will be new technologies coming in. There will be need for new renewable energy capacity and batteries. So it may as well happen that, to jumpstart the next cycle of investments, there could be a need for more proactive role on the side of the government to provide more fiscal support and to provide more support, in particular on the offtake side of the projects.
To be honest, not much to add to what Nico listed as key points. On the regulatory side, I would agree fully. Removal of obstacles in the context of further investments in wind, but also grid developments, that would definitely help. EBRD is also a proponent of CFD schemes and worked with some of the governments in the region to help them deploy such schemes. So if that could help deliver wind projects faster in Bulgaria, why not? But it is, government's call. Then on the market side, I would say that we see, and of course this was flagged as part of previous panels many times, but we see that the pace of investments in renewables and battery storage has greatly outpaced investments in grids. And this is an issue for a number of reasons. The transmission operators, and this is not just the Bulgarian one, but transmission operators in general, they're in a bit of a limbo at the moment, trying to transition from the old one-dimensional systems, where centralized systems, where you had centralized production and limited one-directional flows, to a decentralized system with a lot of renewables and local generation, local balancing, and this has obviously implications for the ability of further renewables to be deployed in the future. So if this can be tackled one way or another, I think that would be beneficial for the industry as a whole. And I would also mention in the market section of the issues, we are bankers. I'm a banker. I'm leading a team of bankers, so we see an issue with predictability of the market. And I'm not talking just about predicting price curves. Because putting aside corporate offtake arrangements, the market is extremely dynamic, and it's very difficult to predict what would happen 5 years or 10 years from now. And this has a number of implications. It's obviously, well, before implications, just the reason is that in the previous many decades, both generation and consumption were very, very stable and easier to predict. Now we are in a market where generation is changing dramatically. At least this part of the equation can be predicted with some certainty for the next couple of years. But then on the consumption side, yes, we all want to do more electrification. We want to convert transport. We want to convert vehicles into electric ones. But, nobody can predict how fast it can happen. On data centers, it's even a more difficult challenge because, even how many data centers are we going to have in 5 years from now? Well, nobody knows. And even a single large data center can skew the mix in the whole equation quite significantly. And that has implications for grid investments, that has implications for the future price curves, that has implications to curtailments, everything. So that is an issue that is difficult to tackle. So these are the key ones. Finally, just a single sentence on the geopolitical front. Obviously, the geopolitical issues and the war in Iran, this is a short-term issue for the whole power sector. Hopefully, this can be seen as a bit of a boost longer term for renewables and the decarbonization. So at least there should be a silver lining there.
Thanks to both. Nikola, very positive assessment. My next question started like there were hurdles mentioned. It's good that Svetlin mentioned some issues, so I can translate. So we were going back to Julian to maybe just a quick question following up on the previous topic that you touched upon. Is it sellers or buyers market right now? If you have to answer to that question, like very straightforward. And the second thing is on the valuation of projects. What do you see is the, so to say, trend about how do investors value projects? And if you can tell us more on, is there a difference between markets, and specifically, is there a comparable asset in Bulgaria valued differently in different jurisdictions, and maybe why is that?
Yes, maybe to continue on the positive side, indeed, there is there is a still strong investment interest in the entire region of the SCE. Probably to concur a little bit with Svetlin for the wrong reasons, given that also what supports this relatively high interest is also the higher returns, meaning lower valuations of assets in our region, which are still, within the double digits range compared to Western European ones. Certainly, there are a lot of differences across all SE countries. We are certainly way less homogeneous market than Western European markets, even if you wish, in terms of various, the application of the green agenda policies of various countries, which makes the attractiveness of each country and the respective valuation in this country vary with those differences. Certainly, if we look at the Balkan region on its own, we see most of the Balkan countries, from Serbia to Romania to Albania and so on, they already implemented, as already mentioned by Nikola and Svetlin, the CFD scheme, which is not the case for Bulgaria. That means that countries like Bulgaria or Slovakia, who also don't have such, we need to compensate by other means to make our profile attractive enough within this entire environment. And, from the investor's perspective, if there is no CFD scheme, then they either need to go merchant, or they need to find their own corporate PPA scheme whatsoever, or simply they might decide not to invest in the country. But I think it's probably local specifics rather than any common features that determine each country's attractiveness, respective valuation levels. It's because talking about CFD schemes, for example, yes, Bulgaria doesn't offer such, and Romania does, but Romania has significantly more costly grid reinforcement costs attached, for example, to their project. So it really, at the end of the day, comes down to how certain country and the projects and their development stage fits into the various investor strategies. And from that perspective, that makes the picture in our region very, very colorful. I remember when they announced in the week they announced the Bulgarian subsidies for the best schemes, the Restore, in the Czech Republic they made a severe cut on the feed-in tariffs, which totally wiped out their business case in those countries. So it's extremely colorful, but at the end of the day, it's the country's overall perceived and attached risk premiums. It's the political, geopolitical, whether you're an OECD country is huge factor for infrastructure funds, for example, and various other market regulatory dynamics. But probably, final sentence, there is one component or one element that could, to an extent, or is at least as important as the regulatory and market dynamics in a country. It's the asset quality itself. Because, as mentioned before, the market is not what it used to be. And if your asset is well commercialized, it is talking about projects at a way more advanced stage, then you have a different offering. If you have a contracted asset of, let's say, 60 to 80%, you have a different appearance on the market. And why is that so? Because simply still the vast majority of investors come from an infrastructure angle origin and less of a trading one. And that to very high extent determines what stands out, regardless of the country legacy and general perceived risks.
Thank you. And talking about attractiveness of Bulgaria, maybe I can switch back again to EBRD and IFC to tell us a bit more on where Bulgaria sits in your view in Southeast Europe. Of course, some comparison would be interesting to hear with other jurisdictions. So maybe start with the overly positive Nikola, and then the more cautious Svetlin.
I need to be careful to come out that IFC is very risk prone. No, look, I think clearly, given the wave of investment that happens, I mean, investors are seeing Bulgaria as an attractive market. I think Bulgaria had one thing working very well for it, which is that relative to the size of the market, it had a very vibrant ecosystem of local entrepreneurs who were willing to take higher risk. And I think a lot of initial renewable energy projects actually happen not even through complicated project financing, but local developers and entrepreneurs using their balance sheets to kickstart the investments in this sector. My view is that, and I think they have been successful, and I think what we have seen in the last few years is that actually there are very high returns in some of these projects. I mean, we all know the story about the battery storage, where there was a lot of concern from everybody, experts, consultants, saying it's a risky strategy, and then we saw some local developers going ahead and doing it, and then making a return on their investment in 2 years' time, which is incredible. I think going forward, of course, it will become a little bit more difficult, but I think the market as a whole stands on strong fundamentals. It will require a little bit more patience of capital. And I think, of course, expecting that we will keep, making returns in a period of 2 years is not realistic. But the fundamentals are strong. Energy transition is a process which will continue. Electricity demand will come. Faster or slower, as Svetlin was saying, is not really clear, but eventually it will come. So I'm personally optimistic, and I think that it's a good space to be in and an attractive one for Bulgaria. And I think because you asked to compare with other markets, I think we are seeing similar trends across the Europe. So I don't think Bulgaria is very different from Romania, and this is anyhow the process of general market becoming a bit more homogeneous, and so yeah, I wouldn't say Bulgaria necessarily stands out. I think it's the overall region and the sector that has a bright future in my view. So as you said, very optimistic here, maybe. Svetlin, please, something more conservative from you.
I have to say that this good cop, bad cop was something that we pre-agreed. But no, actually, I will agree on the positive note here. And, you know, the sign that Bulgaria is actually a good destination of capital is it's obvious, you know, based on the recent experience with battery storage and the early advantage that the country has in that space. This clearly means that there is investor appetite, there is availability of financing, both equity and banking financing, debt on the debt side. There's the resources, and this is not going to change overnight. I also think that another, you know, batteries are positive also going forward because they will, you know, the fact that Bulgaria has an early advantage in this space is kind of starting to punch above its weight. It is helping with future investments because it is effectively helping stabilize the price curves for renewables, further renewables production. It is going to limit curtailments risk, etc., and be helpful for the balancing of the system in general. So this explosion of batteries that we see now is not only a sign of the attractiveness of Bulgaria as an investment destination, but also is a sign that this positive investor sentiment is likely to continue in the future.
Thanks a lot. I will skip one of the questions to Julian and to give the floor to Dimitar, and we'll see if you have time for the next question. And Dimitar, maybe to cut off on the positivity, to tell us a bit if you have had any claims experience so far. Is it early to talk about
That's
that?
not much positive, but okay.
But depends on the side you are. But what do you see on the market? Do you see any activity on that front? And if you can tell us what is the most typical triggers, if there has been.
So yeah, I should go a bit back in time because we do insure projects with best technology back from 2018 in Germany. So we do have quite impressive look, so to say, in terms of claims, in terms of projects, how they developed over time, what happened throughout years, how things changed. But coming back to the question about claims, we already have a few case studies, but it was mostly with old plants. Have to mention this because things have changed a lot since then. We have one case study for a plant COD 2018, which yeah, it caught fire. I'll be straight. Yeah, that was the issue with it. The other one, that's not our claim. It was colleagues of us, but still it happened actually a month or two ago in UK. Again, plant that is COD 2017, old technology. Again, the risk, the problem was fire. So definitely old projects and everything that comes as information to us or claims is connected with being old technology, and fire safety is not being so much of an issue back then.
So old projects and nothing in Bulgaria, that sounds positive again.
Yeah, exactly. Yeah, we don't have old projects, and I should say actually that all of them, most of them, probably 99% of the projects here are definitely certified against fire safety. So not against, they have fire safety certification, so to say, which helps a lot in terms of, I mean, insurance-wise. Basically, they are reviewed as less risky, and the main topic basically with insurance and why it should be implemented at the beginning during most development of the project probably is actually you should kind of try to de-risk the project in front of the insurance companies. So as long as you manage to do it, as long as you're ahead of it, and not doing it during, for example, the construction phase, because that's already a late phase. If you already had planned them, who will be delivering or manufacturing the batteries, who will be installing them, or how the design of the layout will be set up. Basically, these are main topics with the insurance companies, and if you've planned them not insurance-wise, this will basically have a strong effect on the future of the project. So if you want to de-risk the project and make it like stand out a bit, probably have a lifetime for at least 10 years ahead, plan for at least 10 years ahead. It's good to do it ahead, definitely. And still, claims will pop out definitely in the future. That's certain. But as long as we make them less risky, this will make them more preferable for the insurance companies, and then you could manage to receive less. Your tariff, your premium will be less than the usual one, which is, insurance is part of the OPEX. So if you want to plan ahead, if you want to have like a lifetime project, that's the way to go.
Thank you. One last question quickly. Just if you can, what do you think is, if there is any market reform or any development that will unlock more capital coming in Bulgaria for supporting the energy transition? And shortly, of course, if we can, because we are ahead of time.
I'll volunteer first. Very shortly, 2 or 3 measures coming to mind. One is, for certain, we need to stop blocking the wind development in Bulgaria, talking about Bulgaria. With various measures, various reasons that we see there is strong resistance to that, and that needs to be managed for certain. CFD scheme could be an add-on, but perhaps something that's less bound to regulations and would have huge impact to the attractiveness of Bulgaria, but also the region is the connectivity. I think there were many panels before on the conference, but indeed, for me as an M&A banker, selling a project that can sell and have off-take agreement in Germany on their PPA market is a game changer. This is not existent simply because we don't have the physical connectivity across countries in Slovakia, Hungary, Romania, and so on. And this is where I see huge potential, and that accelerating that would be a tremendous difference with a number of advantages that we don't have the time to describe now. But that's my opinion.
Everything is perfect. No, I think an easy one, obviously, is to finalize the process of deregulating energy supply to retail users. I think with the latest legislative changes, we're kind of getting halfway there. We still need to see what kind of impact this new mechanism will have on the wholesale electricity market. But I think that's an easy one, and I think it will happen eventually, and that will additionally improve the liquidity on the wholesale market and make already decently well-functioning merchant strategies even more, I think, attractive. So that's.
And maybe on top of what was already shared, yeah, any reform that facilitates investments in grids, strengthening digitalization, that would allow for even more renewables to come online, would definitely help Bulgaria continue punching above its weight.
Because I'm the only one different from my colleagues here doing insurance and they doing financing, but still, I'll be short, but probably one thing that's being brought up right now and we're being asked a lot as insurers is the topic about ensuring the performance. So I think that in the next 1 or 2 years, this will be like a stronghold for investment funds, for banks, that will bring it probably as a topic. And the insurance market now, I'm sure that there's going to be a developed product for this case, and it will definitely be the next stage in the investment world, basically securing the performance, the income of a best project.